All right, so in this video, I want to share with you some charting tips and charting timeframes. So the question comes down to is, what is the best charting timeframe to look at when you're looking at setting up your charts? And there's a lot of discrepancies that come down to this, and I think a lot of people teaching this probably don't understand the subject. So make sure you really understand where you're getting your information from. So when we look at charting timeframes, one of the things I want you to think about is taking a look at your trading duration. So if you're trading a little bit more of a shorter time frame, or let's say you like to hold your trades for just a few minutes, well, in that case, you'll probably want to use a shorter time frame on your charts. If you're trading a longer duration, then you'll want a longer charting time frame. Now, there's a lot of popular charting time frames out there. For example, the daily, weekly, monthly is probably the more popular one. So we're looking at kind of the daily, the weekly, and the monthly. Now, I have some other charting timeframes in here, and we're going to talk about those here in a minute. But starting out with the daily, I think it's the easiest to look at because every bar represents a single day. Now, I don't have candles on this view, but here is the candles where every bar represents a day. So you can see, okay, well, one day it's up, another day it's up, then another day it's down, 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 up, up, up. So when you start looking at these charting time frames, the daily gives you a nice perspective from being in the trade. Maybe I would say, okay, if you want to be in the trade a handful of weeks, daily is good to look at. Why? Because you can see in this time frame view, maybe spanning things between August to December, and it shows you kind of the trend. It shows you kind of how the momentum is moving and which direction prices are moving. So you can kind of quickly identify we've had a downward trend, and now we're starting to trend to the upside. And if I'm in a trade for about this length of time, which is, let's say, 2 weeks worth, then I can easily spot, okay, the past to possibly project the future. So this is a kind of a good relative thing to look at. Now, if I go into like a weekly or monthly trend, now, again, I'm probably looking to be in the trade maybe for a handful of bars, let's say 10 to 14 bars. So that is actually more 10 to 14 bars on a monthly, about a 1 year. So if I'm looking to be in the trade about a year, well, in that case, I do want to look at maybe the monthly. It gives me an idea and indication on these kinds of things. So looking at how long you're in the trade is quite important because you don't have to choose it right away, but looking at it that way, it's very handy. Now, I will mention there are other time frames because if you're looking this, you're probably looking at also shorter duration. And shorter duration, such as these things like 1 minute, 2 minute, 5 minute. And you can see I don't have an hourly. I have a 65 minute and 130 minute. And what you have to recognize is there's a lot of people that teach about the hourly. They talk about the 4 hours. But when you're using these time frames, recognize where you're learning this content from and think about the logic behind it. There are 6.5 trading hours in a trading day. So when we look at the trading day itself, there's 6.5 hours in the trading day. And that means if I use a 1 hour ticker or 1 hour chart time frame, things don't break down evenly. So the thing is that we're looking at things breaking down evenly. And if it doesn't happen, now you've got this one bar that's kind of a 30-minute bar, or it's just offset. It's not a good charting time frame to break things down evenly. Now, if you're used to that charting time frame and you're okay with it, that's fine. But just recognize the flaw behind it is that things don't break down evenly. So that's one of the bigger issues. So this is why using something like a 65 minute or a 30 minute, so 65 minute is much more conductive than using a 1 hour time frame, or here is 130 minute, rather than using maybe a 2 hour or something like that. So these time frames break down a little bit more evenly. So just look at your charting time frame and make sure it breaks down evenly. I think that's a smarter approach rather than trying to do a 1 hour or a 4 hour. But again, that's personal discretion of how you like to trade. Remember, this is for you and what makes sense more for you, your style, your trades. Now, looking further, I would say the next step to take into consideration is that one chart time frame is not always enough. You may actually want to look at things and have 2 time frames. And the reason for that is because what it gives you is a entry point or an entry signal, and then also a longer time frame to view things. So if we duplicate this, and by the way, this software is called TC2000 by Warden. You can check the link in the description below my website there. There's a commission affiliate thing there where you get also a promotion for it if you're interested in it. So let's go in and let me actually move this here, and then let's duplicate this chart layout. Actually, let me go here and we will add a chart. So let's just add a blank chart over here. We'll move it to the side. So now I've got this. I don't need this alert. We'll move this down here. So we've got this chart and we will move this over here. So now we've got a couple of charts. Okay, so I've got two charts kind of here, rearranging. Okay, sort of. Move down here, one chart, two chart, duplicate, and then move this over here. So when you have two time frames, what you can do is say, okay, I've got a weekly or a monthly chart time frame on one end and a daily on the other charting time frame. And this can make things a lot easier to look at where, hey, how is the trend moving? You can look at it from a weekly basis and you can also look at it from a daily basis. The same thing goes from a 15-minute. I like the one on the right to be my entry point and the one on the left to be my longer time frame. So like here I could have the daily and here could be like a 10-minute or 15-minute to show you how are things projecting. So how are things moving? And you might want to, you know, set up the charts to where you can see where your mouse is, so that way you can see it on both ends, where, let's say, the support, the resistance is. And of course, if these charts don't, you know, if you don't like those kinds of things, let's just switch it to a candlestick, and we'll switch this also to a candlestick, just to give you kind of a general perspective. So there's the daily, and here's a 30-minute. And now what you'll be able to see is, okay, if I draw a support resistance line here, okay, it's right there. And it shows you, okay, well, looking at the shorter term or the shorter time frame, that's kind of could be the entry point. And the long term also looks like it's trending to the upside. So having those two time frames is handy. As far as for me, I have it on multiple monitors, so I stack things kind of like this. You can also stack things based on something like this, where I have another chart here on the side, but this is for multiple monitors. And there's some other screens here that you can, you know, set up and configure your charts. But usually you'll see me with 2 or 3 different timeframes to confirm kind of that all of these are moving in the appropriate direction or in the appropriate space. Anyway, so that's kind of one perspective to these charting things and timeframes, and just having 2 different timeframes to help you get into positions. One is the entry and one is to kind of confirm the longer term trend is still in sync with where you want to get into the position. So anyways, these are some of the tips that I would say is looking at these charting timeframes, how you could set these up. And I would definitely look at kind of like the 5-minute, the 15-minute, the 30-minute, 65-minute, 130-minute. Those are the timeframes that are a little bit more popular. If you kind of look at these timeframes, and we edit the time frame settings, you can see right there is also a 4-hour in there and the hourly, but I don't have them checked. So here's some of the other ones that are quite a bit more popular. I like to use more around the 10 and 5-minute, depending on the shorter term trading, and the 15-minute. Once I get into like a longer term swing trade, multiple week holds, I'll go into with a 65-minute and a 30-minute for the entry confirmation, and then more of the daily and the weekly for kind of checking the longer term trend. So hope that helps. Truly appreciate you guys sticking with me and all the great comments. If you'd like for me to review some of the stocks or ticker symbols, just write a comment in the description and I'll take a look at them. And one of the weeks we'll post a little bit of a technical analysis recap on the ticker. So thanks again. Appreciate it. Feel free to check out some of the freebies, PDFs, checklists, and so on the website. And I will see you in the next video. Take care. Bye-bye.